Sharmila, first a word on HDFC, 10 basis points increase in terms of NPA. Say if that would have happened for Axis Bank or ICICI Street, would have been very happy. But because it is HDFC, is it a matter of worry, or it's fine looking at the condition, looking at the book that they have? Just about 300-400 crores of slippages in such an economy is quite normal.
Yeah, I think that's it. But as you said, that because it's HDFC, perhaps, it is cause for concern, largely because, this is one bank that has sort of been able to ride the rough weather so far, largely because I think, their balance sheet is strong and their reserves are strong. So, they've really been insulated from a lot of, they've not been in that sort of fast growth and therefore prone to make mistakes kind of a trajectory which some of the later private banks may have fallen prey to at some point in time. So I think that said, if you look at the other numbers, pretty much something that they're able to do quarter on quarter, I don't know for the last how many quarters, where now at this base also, this large base also, if they're able to report that 20% kind of a growth, then it's pretty amazing. So I think you have to look at everything together and at the same time look at the stock price also, because the stock price is at a premium to most of the other private banks, which is why I would say that the reaction to the result has been sort of flattish and really no great excitement there.
If I look at Kotak Bank numbers, there the NPA inched up, but for HDFC Bank, loan growth was decent. I mean, it was in line. But for something like a Kotak, the loan growth was slightly lower than their guidance. So you would want more explanation over there, or Kotak also, like HDFC Bank, has constantly proven itself, and people will give it 1 or 2 quarters before they take any major action.
Absolutely. I think that if any private bank sort of manages to hold its own in this challenging environment, and maybe just the growth is a tad slower, then I think market will definitely give them that period. So maybe you could see a bit of a correction. I mean, we have seen it across private banks after the kind of run-up that we've had. Post numbers, you did see a little bit of a knock even on an IndusInd Bank. Then, you had that little bit sort of negative news flow for Yes Bank with Moody's, etc., which, then sort of got clarified. So that bank reacted in another 15-20 rupees. So because I think they're priced, so well, so to speak, where they're trading at 3, 4, 5 times book, which is why you probably won't see a runaway rally in any of them unless something really exceptional happens. But at the same time, I think the downside is also limited, because I think market sort of recognizes that this is where the strength in the banking space is.
Right. So would you want to buy Kotak and HDFC in the correction, or right now, or just wait?
I would wait, and I think if I had to buy something, then within the sort of the larger private banks, maybe it would be an ICICI Bank, and among the other players, Yes Bank and an IndusInd Bank.
Right. Axis Bank will be declaring numbers tomorrow. You think that will be an interesting one? There, like HDFC, as they say, as you said, constantly they have been meeting street estimates or been slightly higher. Similar is the case with IndusInd as well as Kotak, not much movement. But for Axis, we've seen numbers getting volatile. That will be an interesting one, or how Q1 is coming in.
Absolutely. I think because there again, that their loan book is to some of the riskier sectors. So that's why it also becomes an interesting result to watch. Not just because of how Axis Bank is sort of able to manage its show, but also because it also gives you like a view on how some of the riskier assets are going to pan out for a whole host of other PSU banks as well. So if you hear from Axis Bank, for instance, tomorrow that things are not progressing the way they would have liked to on some of their debts, then I think it will stand to reason that you could see a bit of the correction deepen even on the PSU banks.
Right. So as far as PSU banks are concerned, the rally has already factored in the good things.
Yes, I would think so. Because this kind of rally that we've seen, it's in a way it's not justified. Because yes, a lot of negatives were in the price, and yes, going forward there could be positives. But at the same time, let's not forget that just 2 months back you had like a disastrous set of numbers from a whole host of these banks, and then for them to have rallied.
Not 2 months back, 6 months, 2 months, constantly for the last 4-5 quarters at least we've seen them.
Yes, I'm just saying 2 months because, the Q4 numbers, by the time they come, sometimes it's end of May. So you don't necessarily get them in April, but you just heard from them end of May, which is like less than 2 months back. And then now you have a 30-40% kind of a rally in these last 2 months on some of these names. So, that's when it becomes a little sort of difficult to believe and a little difficult to buy into. So which is why now I would, as you know, we've been discussing, my strategy is clearly to wait for numbers before you sort of put your neck out and, you buy anything in this market.
Right. As far as, something like a PSU bank is concerned, how important was the capital that they got through, or was it factored in because it was, a part of the budget?
But always it's good news when it comes. So as you said, they had spoken about it in the budget, but when it actually gets announced, it is a relief. So those were the two, three sort of positive things that did happen for PSU banks. One was the announcement of this. Then that asset reconstruction bit that you heard a lot of companies do. I think that's a definite positive for PSU banks. So yes, I think going forward also there will be positives. But the fact remains that in spite of all that, the run-up was still way too sharp.
Right. Something like a SBI did not need capital, but it got capital. Do you think that's a positive? And, within this capital allocation, we can see some changes coming in, or, some positives and some negatives coming in?
Obviously, within the PSU banking space, if there is a bank that I'm sort of positive on, it is SBI for a whole host of reasons. So one of it is obviously this. And I think even in terms of numbers, after the shocker that they had, I think 3 or 4 quarters back, since then things have sort of improved for them. So I think within the PSU space, this would be a bank that I would like. Then you are hearing about all their associate banks, and that has also gone like one step further. So we are still a long way off from really seeing anything, but that sort of moved one step further. So as I said, lot more reasons to be positive on SBI than some of the other PSU banks.
Right. If we just pull up the mid-cap space, there's been a lot of stocks, which have gone up and, done pretty well. But one sector that has consistently done well is the cement pack. So, ACC, Ambuja, probably today there is some news flow, that's why they are doing well. But you believe Ultratech, ACC, Ambuja, they still deserve to be bought at these levels despite the recent run-up?
Well, they've sort of joined the party late, So, and then again, I think what I like about the sector is the fact that going forward, if this is not really a quarter which is sort of the cement quarter, so to speak, because the monsoon is typically you're expected to see a little bit of a slowdown. But given what you've been hearing from NHAI and that overall expectation that infra activity will improve, one hopes that demand for cement will go up in months to come, and their capacity utilization levels will go up. For instance, if you saw Ultratech numbers, it was a sort of a mixed bag. So on the one hand, where you had a beat on, say, a profitability or a margin, it was some of it was because of some inventories, etc., which are factors that won't be there going forward. So therefore, you would want to see that sort of better demand coming in the remaining part of the year. So I think it's a combination of reasons that is really working in favor of cement as a play. Today, of course, the positive news flow, then improved numbers, and the expectation that things could actually look better for, from a demand perspective for the sector going ahead.
Right. How would you look at ITC numbers are awaited? Do you think that the rally from Feb that we have seen for ITC from the levels of 280, I think, to about 360, 370 now, it's something which is factoring in good numbers?
Yes, I think so. And I think, there's also a bit of a street expectation that you could see a better volume growth sort of from
1%
ITC
is the number.
Yeah, so that's been doing the round. No, better than 1%, I believe, which is what's doing the rounds. Which is why also I think there has been some sort of positive rub-off on ITC today. But that said, very honestly, so far in the earnings season, there's really not been much to really choose from, in the sense of numbers. I think HUL was sort of disappointing. So I think among the large cap, I think Reliance was good, Ultratech were good, and I think Ashok Leyland today. So, it's been really far and few sort of in between sort of good numbers.
We've not spoken about Ultratech. Can you just tell us what do you think, about Ashok Leyland? How do you think Ashok Leyland numbers were? Does it deserve a 4% sort of a move?
Yes, not really perhaps only because of numbers, but also because of the fact that the stock hasn't really done anything post their last, the earnings that they announced, because there was a little bit of a disappointment there because there was some exceptional item which sort of eroded into their profit, etc. And then, there was a little bit of a doubt going ahead. But if you look at the numbers today, if you look at the kind of margin picture that is coming forward, as well as the demand picture that's coming forward, as well as what they said in terms of commentary for Q1 in terms of how the entire demand bit is panning out, and how they're sort of volume growth is sort of better than the average market growth, then it sort of gives you reason to believe that there could be a bit of a rally, a bit of a catch-up rally, so to speak, in Ashok Leyland, where you could see it go back to that 115, 118 kind of level.
Right. So, if you just look at Ashok Leyland, 11% margins is a good number actually.
It's better than what they did the earlier quarter. Let's put it like that. So, I think that's the reason why. If you're looking at it, in a sort of a holistic manner, and what other companies are doing and what they've done and how their margin picture stands today, then yes, I think it's a decent number.
Right. Some stocks like BHEL have rallied particularly a lot. We've not seen any major changes as far as their earnings is concerned. Do you believe that one should stay away from these names which have really seen very sharp rally but not improvement in the earnings outlook? There are a lot of stocks into this category.
Yes, but I think if you were to see a mid-cap momentum sort of getting back into the sort of the kind that we had last week, we're sort of in the middle of, then what happens is that actually the weaker names get bought, because then there is that expectation that they could be the sort of companies that could do better in an improving environment, and there could be a beat there. So
but time and again we have seen companies that perform only keep performing. But still that left out feeling comes in, and that's why you see such frantic buying into these names.
Yeah, I think so. But I would agree with you. I would really still go with names where earnings were strong. I am not really straying from that thought. I think that it still makes a lot of sense to stick with names where earnings are good and leverage is low, and the possibility of growth ahead is also on the card.
Right. So, we spoke to Samir Arora just a few days back, and he said that, I have been owning private banks and I continuously own them, not that I keep selling them. Do you think that that actually has to be the strategy? You have to stick on to names that are, giving you returns, that are giving you numbers, that's essentially the way that one should go ahead?
See, very honestly, if you have been in the market long enough and you bought into these private banks and you bought into them at significantly lower levels, so then the question remains that, if you were to sell one of these names, what do you buy in place of that? Because everything else is also run up sort of in along with the name that you have. So I think it becomes a difficult question. So I think it's rather than looking at what you already have, what I think, which is why this whole sort of mid-cap rally also that you see, is that I think markets now beginning to sort of try and find sectors and stocks which are which have not been bought into earlier, or which have been doing badly, and where there is a possibility of things going, getting better going ahead. Like I think chemicals, dyes, these are all sort of new sectors.
Then or sectors which people don't own.
And then sectors where maybe because of some anti-China dumping or something, things could look better. So, on an individual day, you could have tile stocks do really well. So, that's the kind of market that we are in. So, obviously, I think something that you bought in the much earlier and where you're making decent money, it makes a lot of sense to just continue with that name.
Right. As far as, the smaller sectors that you were saying, so sugar and fertilizer, both have done well. Do you like any of these sectors?
I think perhaps fertilizers, because I think from a domestic perspective, what one is hearing from because of the better monsoon is that farmers will have a good year this year, and you are seeing a pickup in, this agri input kind of a space. So perhaps I think fertilizers could have a good year after a gap of 2 or maybe 3 years. So that could be good news.
Right. As far as, oil marketing companies are concerned, they're on a dream run right now. But do you think that this dream run is taking them on a very high valuation, or they're still decently valued?
Actually, I would agree that, marketing companies now have really gotten to a level where perhaps there is not too much left on the table. And also I think crude prices are now getting increasingly sort of range bound. So now you have this range which is between, say, 43, 44 to about, 48, 49 on the higher side. And you sort of held that for the past 5 or 6 months. So you know that earnings, etc., are going to be on a good sort of an even keel, and there's nothing really much to disturb. I think the surprise or the positive, if at all, has to come, some positive buying has to come in. That could come in the exploration space, especially, like 2-3 weeks back, we heard of something on kerosene. So suppose that gets an affirmation and you hear that there's going to be deregulation there as well. You did have that negative news with that royalty bit hit ONGC, etc. But I think if you were to hear that kind of news and the stability in crude prices, then maybe there could be more of a case for buying into exploration companies, which is not there as of now. But marketing companies, I would broadly, agree with you. I think it's already a sector that's seen a lot of buying, so nobody's selling it as of now. Especially what with HPCL announcing the kind of bonus that it did yesterday. So people are hopeful and they will continue to hold these stocks. But perhaps in terms of going up too much from these levels, I think that is sort of limited.
Right. Just a word on Oil India, ONGC. What did you say, that they are looking attractive or buy levels, or you would just wait for them to correct?
No, I think the correction has already sort of taken place. So I would wait for positive news, and I would wait for an affirmation that if you were to really hear, for instance, that yes, kerosene is going to get deregulated, and you are going to see that 25 paise hike every month or whatever formula that is worked out. Then I think a lot of concerns even for these exploration companies go away, and then they can also manage their things much better going ahead. So then I think in that case there could be a case to buy into an Oil India or an ONGC going ahead.
Just a last word on the IT pack. How do you look at all the results? We have, except HCL and Tech Mahindra, we have all the results. Even a couple of mid-cap companies have declared numbers. Any view on these names?
Yes, obviously I think a bad quarter, and in a way sort of expected also because of this whole Brexit background that these results came in. Although managements have not really said that it has impacted them in any way, except I think Mindtree, which did say that Brexit has had or will have a sort of a bad impact on numbers coming from Europe going ahead. But that said, I think the correction in these stocks has also been quite significant, whether it's a TCS, whether it's an Infosys. So, if you have a reasonably long-term view on the market where, you're not chasing momentum or looking at momentum, then to my mind, TCS and Infosys are now at levels at which they can be bought.
That's the reason why Wipro did not fall. Is that the reason? Because it's trading at 13 times despite the EPS cuts, maybe 13.5. I know beyond the point of level, these names would continue to make money.
Yes, and again, I think Wipro is not like the favorite stock within that space. I
it's
think
not over-owned.
It's not over-owned. So there aren't too many people who will come and sell in that stock. On the other hand, Infosys tends to be volatile on earnings day, irrespective of numbers. Whether when numbers are good, the reward is also extraordinary, and when numbers are perceived to be bad or in sort of maybe not even bad, but something market doesn't like, then you see that correction also pretty severe.
Right. Sharmila, thank you so much for joining us this afternoon.